All right, welcome back, everybody, to the deep dive. We're doing things a little differently today. Yeah, we're diving deep into the world of crypto trading, specifically on Binance.
Binance, huh? Sounds exciting. I know a lot of our listeners are interested in crypto.
Absolutely. And there's no better place to start than with the Binance Trading Guide itself. It's a treasure trove of info.
You know, crypto can be a bit of a wild ride.
Yeah, for sure. Remember when Bitcoin went crazy last year? It's definitely not for the faint of heart. But hey, high risk, high reward, right?
Oh, that's the saying, isn't it? But seriously, the volatility in crypto is something else.
So true. In the guide, they talk about how crypto is still kind of the Wild West out there.
Yeah,
Not as much regulation as traditional markets.
exactly. That's a big part of why it's so volatile. Plus, it trades 24/7, so news from anywhere can send prices soaring or plummeting.
It makes you wonder, what kind of news really moves the market?
Well, think about it. Positive regulations from governments, big companies adopting crypto, those are usually good signs.
Right, makes sense.
But then you have things like security breaches, negative press. Even Elon Musk tweeting can cause chaos.
Oh man, don't even get me started on Elon and his tweets. It's like he has the power to move markets with a single word.
Pretty much. It's wild. That's why staying informed is so crucial in this space.
Absolutely. This guide really stresses having a game plan before you jump in. No more just buying Dogecoin because it's trending on Twitter.
Definitely not. And the first step is defining your goals. What are you looking to achieve with crypto trading?
Yeah, are you a hold on for dear life kind of investor or more of a day trader trying to ride those short-term waves?
Huge difference between the two. If you're in it for the long haul, you're looking at fundamentals. Blockchain tech, real-world uses, strong development teams.
I see. So basically betting on the technology itself succeeding long-term.
Exactly. But if you're a day trader, you're all about technical analysis, charts, patterns, indicators, trying to predict those short-term price swings. Totally different ballgame.
So long-term is more about research and belief in the tech, while short-term is like reading the tea leaves of the market.
In a way, yeah, a lot more focus on the technical side.
Makes sense. Now, this guide doesn't shy away from the risks involved. They even talk about survival, which seems pretty intense for finance.
Well, in a market this volatile, risk management is everything. You got to protect your capital. That's where tools like stop-loss orders come in.
Stop loss.
Mm.
That sounds familiar, but I'm a little fuzzy on the details.
Basically, it's like setting a safety net. You tell the exchange, if the price of this coin drops below this amount, sell it automatically. Limits your potential losses.
Oh, I see. So if Ethereum tanks, I don't lose my entire shirt.
Exactly. And on the flip side, you've got take profit orders. Same idea, but in reverse. You set a target price, and when your coin reaches it, it sells automatically, locks in your profits.
Wow, so I can literally set it and forget it. That's pretty cool. But
Yeah.
can you give me a real-world example? Let's say I buy Ethereum at, I don't know, $2,000.
Sure, let's say you're worried about a dip and set a stop loss at $1,950. If Ethereum drops below that, your position sells automatically, limiting your loss to $50 per Ether.
Okay, I'm following. And what about take profit?
Well, let's say you're bullish and think it'll go to $2,100. You set your take profit order there. Boom, when it hits that price, you've automatically locked in a $100 profit per Ether.
Okay, I'm starting to see how these could be really useful tools.
Absolutely. Especially when you're dealing with a 2004-7 market like crypto, you can't always be glued to the screen.
No kidding. And speaking of spreading the risk, the guide emphasizes diversification. Don't put all your eggs in one basket, as they say.
Classic advice, right?
I
But it's especially true in crypto.
guess I always thought of it as, well, it's all crypto, isn't it? What difference does it make?
The crypto space is actually incredibly diverse. You've got Bitcoin, the OG, seen as a store of value, like digital gold.
Yeah.
Then there's Ethereum, which is like a platform for building all these decentralized applications.
Right.
Then you have coins like Binance Coin, offering benefits within their own ecosystem. And then a whole universe of newer, potentially higher growth projects.
Like Solana, right? I hear that one a lot.
Exactly. The point is, by diversifying, you're spreading the risk. If one sector takes a hit, your whole portfolio isn't going down with it.
So even if some new regulation comes out that's bad for, say, privacy coins, my entire investment won't be wiped out.
Exactly. You're better protected because you've spread your bets across different parts of the market.
Gotcha. Now let's talk about Binance's own tools. I have to admit, the section on TradingView integration in the guide kind of fried my brain, all those charts and indicators.
Yeah, TradingView can look intimidating at first glance.
It's like something out of the Matrix.
Uh-huh, in a way.
Right.
But think of it like this. TradingView gives you superpowers. You can visualize price movements, spot trends, even backtest your strategies.
Bat test.
Yeah, basically you test your trading ideas on historical data to see how they would have performed. It's like a time machine for trading.
Okay, that makes sense. But I'm still not sure I could decipher all those charts and lines.
You don't have to become a master chartist overnight. Even understanding a few basic indicators, like moving averages, can give you a big advantage. It can help you see if a coin is trending up or down over time.
So I can get some insights even without having a PhD in technical analysis.
Absolutely. And the beauty is Binance integrates TradingView directly into their platform.
Sweet. And then there are trading bots, which have always sounded both futuristic and kind of scary to me.
Yeah, I get that. The guide explains a strategy called grid trading that bots can use. Imagine setting up a grid, like a chessboard, with each square representing a price point.
Okay, I'm picturing it.
Your bot automatically buys when the price drops to a lower square and sells when it hits a higher one. It's designed to profit from those constant price fluctuations.
So it's like having a little robot trader working 24/7, even when I'm sleeping.
Exactly. But be careful, bots aren't a magic money machine. You need to understand the strategy and, importantly, test it out before you risk real money.
Good advice. And on that note, the guide really stresses the importance of continuous education. They even point to resources like Binance Academy.
Yeah, Binance Academy is fantastic. It's got everything from blockchain basics to advanced trading strategies, and it's all free.
Wow, that's amazing.
Yeah,
But honestly, with so much info out there, how can anyone keep up?
it's a constant learning process for sure. The crypto world is constantly evolving, so staying ahead of the curve is key.
Makes sense. Are there any other resources you'd recommend?
Definitely check out online forums and communities. There are some great ones out there where you can learn from more experienced traders and get different perspectives. Think of it like having a global network of mentors.
It's like a great way to put it, a global network of mentors. Okay, last but definitely not least, let's talk about the mental game of trading. I think that's something a lot of people, especially newbies, struggle with.
Totally. It's one of the most underrated aspects of trading, especially in a fast-paced world like crypto.
We've all felt that FOMO, right? The fear of missing out on the next big thing.
Oh, for sure. FOMO can be a real killer. It can lead to impulsive decisions and often losses.
Yeah, I've been there. Bought a coin because it was pumping on Twitter, didn't do my research,
Right.
and, well, let's just say I learned my lesson.
We've all been there. That's why having emotional discipline is so crucial.
Easier said than done sometimes.
I know, but there are things you can do. Set clear rules for yourself. Define your risk tolerance. Stick to your strategy, and don't get caught up in the hype. Take breaks. Step away from the charts. And remember, even the best traders don't win every trade.
That's a good point. It's easy to get discouraged when things don't go your way.
Absolutely. The guide also talks about accepting losses as part of the game. Don't dwell on them, learn from them, and move on. It's all part of the process.
That's great advice. Okay, before we wrap up, let's touch on some of the specific coins mentioned in the guide. Bitcoin, Ethereum, Binance Coin, Solana, even Dogecoin gets a shout out.
They each have their own strengths and represent different parts of the crypto ecosystem.
It's a lot to take in. Is there one that stands out to you right now?
It depends on your goals and risk tolerance, but I'd say each of those coins is worth researching further.
Great point. Well, this has been an incredibly insightful deep dive. Thanks for joining us and sharing your expertise.
My pleasure. It's been fun.
For all our listeners out there, remember, knowledge is power in the world of crypto. Do your research, use the tools available to you, and don't forget about the mental game. And who knows, maybe you'll join that global network of crypto traders. Thanks for tuning in to The Deep Dive. Don't forget to like, share, and subscribe to Essential Dialogues for more deep dives on trending topics. We'll catch you next time.